Hello, how do I find dividend? How do I find stocks that pay dividend? Using Charles Schwab brokerage account. So if you have Charles Schwab brokerage account, you will log in. You'll put your username and password and log in. If you want to create an account, then you'll click on open an account, and you can open an account online. So let's say you have a Charles Schwab account and you want to invest in dividend stock. So once you log in the top search bar under research, you'll click on US market, and that's what we did. Usually by default, when you log in, you'll be under account and under summary, and then you'll go to, and under account you have summary, and that will show you the different accounts that you have with Charles Schwab, including checking account, saving account, brokerage account, Roth IRA if you have Roth IRA with them as well. And you can go to position. It will show the different companies, the different stocks that you have in the account. It will choose an account by default, and then in the drop down menu you can just choose the account you want to see the inside of, or under summary you will be able to just scroll down and click on an account that you want to go inside of, and you will see the different stocks that you have in that account. So we are going to look for stocks that pay dividend. So you will go to research and click on US market, and that's what we did here. So when you do that, if you have the option of return to classic view, you click on classic view. And under classic view, and for today we are going to look for dividend stocks in the household durable, and that will be consumer discretionary industry or sub-industry. So you scroll down and you click on industries. So it's going to show you the industries, and we are going to work on consumer discretionary industry. For the past few videos that I recorded and published related to dividend stocks, we have been working with the consumer discretionary industry. It has 1,075 companies in it. So you click on the industry you want to visit, and in this example is discretionary, is consumer discretionary, and it will show you the path as well, the industry, the sector, and pretty much the consumer discretionary is the sector. So let's go back one step. So when you click on industries, it will show you the different sectors that are public companies selling stocks on the on the stock markets. So you have the SP 500 markets. So you have the different type of sector, and we are working with consumer discretionary sector. And the consumer discretionary sector has multiple industries in it. The companies are classified by sub-industry and by industry. So under consumer discretionary, we have multiple industries, and we are going to work on household durable. And when you click on the industry household durable, you'll find multiple sub-industries, and you can see consumer discretionary as sector, household durable as industry. And now we'll find the sub-industries. Sub-industry in the household durable industry. So we have consumer electronic, home furnishing, home building, household appliances, houseware, and specialties. And they will tell you how many companies is underneath each one. So we are going to start with the first one, consumer electronics. And we are looking for dividend stocks to invest in long term. So if you are looking for dividend stocks to invest in, that is the process that we took that I'm sharing. But I'm sure that's just one way. There will be multiple ways to find good stocks that pay dividend to invest in. Some investors like dividend stock and some don't. So it's just if you want to create streams of income through dividend stock, that's what this video is about. So under household durable, we have consumer electronics. So it will show you different metrics here, and by default is performance metrics. So we are going to click on valuation, and under valuation we will focus on dividend yield. And I click on dividend yield because I wanted to organize it from the highest to the lowest. And as you can see, the dividend yield, the highest is kind of low. So at this point, we have criteria that we like to abide by. So when you are doing this, it will be good to have to set your criteria. So I'm going to share mine with you, but you will adjust it to fit your liking. Okay, let's go back here. Okay, so how to find good dividend stocks to invest in. So you are going to set criteria. Now I show you the pathway to access the companies, and I show you to click on the valuation to sort it by high dividend, high pay dividend yield, annual dividend yield, or annual dividend rates. So you saw the stock by dividend, and that's that stage that we are on right now. So you will set the minimum that you don't want to go underneath. So when you are investing in the company, you don't want them to pay you below a certain dividend, annual dividend rate. So you set that rate, and then you use that benchmark to evaluate the rate they are paying, and anything below that benchmark that you set, you just don't focus on those. You focus on the one that met that benchmark that you set. So your second filter will be to eliminate. Now that you put a stop at the high pay dividend that you are going to take a look at, you go to the left and you look at the company's name that pay those type of dividend rates, and you will eliminate LLC, partnership, at any company's name that end with LLC, LP, partnership, partners, LTD. So you eliminate LLC and partnership companies from the list. And what you are looking for are companies that end with CO, corporation, INC companies, so you want companies that are corporations. And the reason is because LLC, if you invest in LLC, they will send you Schedule K that you'll use to file your 1040. And sometimes those Schedule K can come late. One second, because LLC don't pay tax, they don't pay tax, they tend to pay high dividend yield, but then they pretty much transfer their profits and loss to their shareholders. So there could happen a point that you might have to pay tax on those profit that you don't even have because it's in the companies, but you will pay tax on them. So just keep that in mind. And if you have it in your Roth IRA, because of that LLC, the brokerage account will file a specific tax return form for your Roth IRA for that company, LLC or partnership company that you have in your Roth IRA. Avoid international companies, and I like to avoid them, especially if they have an ending that I don't know if that's corporation or not. So a lot of times those international companies will have SA at the end of it. So those are the first things we are going to work with, and we can come back later to our filters here. So let's go back, and right now, and I can still show you some criteria that I have set. See, should be. Let me see if I have. I'm not seeing it here. Okay, but so an example is, let's start with the first one. So I'm calling the parameter, but stocks from companies in business before 1990 paying 2% and up annual dividend chart show upward growth. That's an example of filter. So another one is stock from companies in business before 1999 paying 6% and up annual dividend show growth and dip. So pretty much what that means is, in this criteria, I'm saying that, okay, first I'm going to focus on companies that have a growth, upward growth on their chart and have been public before 1990 and pay 3% and up in dividend rate. So if I'm going to invest in something that pay 3%, it better have an upward growth chart for the maximum chart and being in business before 1990. Because a lot of most companies will pay you low dividend rates. And if I'm going to invest in a stock that pay, if I'm going to invest in stocks that have and growth and deep type of chart, I want that company to be paying me 6% and up. And I say those companies is okay if they're in business before 1999 or pretty much before 2000. And another criteria is, okay, so 5% and up annual dividend upward trend when public before 2000. So that's another filter, and technically that will be the first filter I'll work with. And after I invest in those companies that have upward growth 5% up in public before 2000, then I can tackle the one that pay 3% up with upward growth chart, and then I can see the one that have growth and deep and pay higher dividend rate. So there is a lot of companies. You first record them on your spreadsheets, set your filters, and then put them through your filter. So you have to put them through some set of your filters. First, the one that I showed you earlier, the first 3 filters first, and then when they pass that, you record them on your spreadsheets, and after that, you'll set other filters to filter those on your spreadsheet and mark the one that you find interesting that you want to invest in. And when you are ready to invest in, then you check how much they are selling compared to their 52 weeks low and high to see if they are close to their 52 weeks low, and that's when you invest in it. Okay, so we are going to go through an example. We are not going to trade, but we are purchase, place the order, but we are going to go through the filter. So in this one, we are going to go with 3%. So we are going to set the filter for 3%. Everything about 3%, we will consider that. And in this sub-industry, everything is below 3%. Therefore, we are not going to consider any one of them. It does not mean they are bad company. It's just that it does not meet the purpose for which we are looking for those stocks. We are trying to, in this video, we are talking about how to invest in dividend stock with the goal of creating a stream of income through dividend stock. So that means whether the stock market is booming or is in crisis, you are not going to worry about selling a stock at a loss or making a huge profit by selling for profit to access your profit or anything like that. Or if you sell it, you lose money because the market is down. Whether the market is down or not, the companies will continue to pay you dividend. Not always though. Some companies that are not doing well could stop paying dividend, but some will continue paying dividend. So with the assumption that whether the stock market is down or not, you are going to continue generating dividend income, having your money there. That's why we work with brokerage account, because to create a stream of income through dividend stock, you want that income to be easily really accessible to you if you want to tap into it. Therefore, it's good to do that in a brokerage account. But keep in mind that when you do that in a brokerage account, it's taxable. That dividend, whether you reinvest it or not, you will pay tax on it when you file your 1040 at the end of the year. Okay, so, but at the same time, the government does not tell you when you should touch that money, how much you should take out or anything like that, because it's not in a Roth IRA and it's not in a 401k or IRA. So we are going to get out of this industry because we do not have any company we want to invest in. And some investors like to invest in companies that grow, and over time, when they sell it, they will have a lot of equity in it that they will sell it for a large profit. But again, you have to sell it to realize that gain. The company is growing, the stock price is going up, you have to sell it to realize that gain. You have the gain, but it's not realized. So, but when you have a dividend stock from day one, you earn dividend income on that money that you invested in that company stock. So, and those companies may not grow, may not show a lot of growth quickly, but they will pay you dividend. And if you choose good companies to invest in throughout the years, decades, they will pay you dividend. And by upward growth type of companies, pretty much companies that grow in over time, so the price will increase over time. So that means you have equity building to it as well. And when you decided to sell it, you will sell it for profit. So you earn income twice through dividend stock, through dividend income, or through dividend paid to you, and then through the equity that you build over time by investing in that stock. So I like that, those type of stock better. So when I'm investing in stock that do not pay dividend, a lot of time is for me to trade it. So that means I'm going to trade it within a year. So you can do both and see which one you are comfortable with. You can trade a little bit, you can invest as well, and see which type of person you are. I like investing long term more than trading. But keep in mind that when you trade, you make more money on the short term. And when you invest, you make more money in the long run. But trading requires more work. You have to, to pay attention to the stock markets. And pretty much, is more the fluctuation going on in the market that you are betting on to trade. So it is a short term, you do make a lot of money trading if you know what you are doing. So now we are done with consumer electronic. We are going to go to home furnishing. It has 15 companies, and if you are an employee, it is good to have multiple sources of income through stock investment, your job or your salary, having your own business, and have rental properties, or have a combination of some of those options, different ways to make money, so that you do not solely depend on income from your employer to provide for your family. One, that's kind of stressful. That's a lot of stress to put on your employer, knowing that he's the one putting bread on your table. And second, it puts you in a tight position that if you do not like that job, it's kind of stressful for you to leave that job for another one, because you don't know the challenges you face in the new place that you go. And it's not just about the job, people you work with as well. So there is a lot of things that come into play working for somebody. So it's good to have multiple sources of income, so that you know that you do not depend on your employer to provide for your need. Maybe your wants, but not your basic need. That's why if you can spend less than you make, so that you can use the rest of your income to put to work, investing is one way to put your money to work, where your money generates more money for you even while you sleep. It's now you trading your time for money. So in this sub-industry, home furnishing, we'll click on valuation and we'll click on dividend yield. And you do not have to invest a lot of money. You can start with very little, and you can see those stocks here. Some of them are selling for $29, and Charles Schwab, for most of the companies stocks, they will not charge you for fee to trade, or to buy or to sell. And I think they charge for some penny stock. I'm not sure why, but they used to charge. Now they don't charge it anymore to buy or sell stocks. So for $29, if you have $30 to invest, you just transfer it from your checking account to Charles Schwab account, to your Roth or to your Brokerage account. And when you find a stock that you can afford to buy with the amount you have in that account, you just place, and I don't know if that's one share, you just place one share of, you just place the order. So, and in the past, my husband and I, while we are trying to pay off our debts, we just stop investing, and we use our allowances. We pay each other $100 a month for our allowances for things that, to buy things like shoes, socks, undergarments, or grooming products and things like that. So, and we use that to just invest in our brokerage account and Roth IRAs, and we trade a lot of penny stocks. We'll buy when they on low, when close to 52 weeks low, and when it double in price, we'll sell it and get out of it and buy another one. We lost a lot of money doing that, and we made a lot of money doing that as well. So, but it just allow you, by doing it, by starting with a low dollar amount, it just allow you to learn the process and see what you are comfortable with. And I noticed that I'm more of an investor because I like to hold on to the stocks, and I like dividend stocks, and my husband like to trade. So, and make his money very quickly, and I just prefer to have the companies there in my account. And that's why I like dividend stock, because while my money is sitting there, I want that to be generating something, so that I don't have to sell it to make before I can realize again. Even if I'm reinvesting the dividend is still making my money grow there in that stocks, if that makes sense. So now that we are under valuation, I think I did it already, but I'm going to do it again. I'm going to click on the dividend to sort it. And here under home furnishing, we have 6%, 5%, 4, 4, 3, and then that's our threshold right there. But we can scroll down for you to see what is out there. It does not mean they are bad company. It just means that for us to make income to dividend stocks, they do not meet our requirement. So we are going to, at this point, we have those at the top, and now you are going to come to the left and look at the company's name. That's the second filter. INC, we'll keep it, and INC, that's good. Corp, yes. INC, yes. INC. So all of them met our second filter, and we didn't see any international companies in them just by looking, because they all ended with a terminology that we know. But I can scroll down to see if I can find an international company here that I can. For instance, do you see this one? I'm not sure why, but if it was in a high dividend, things I will not select it because I'm not sure what that SPA is. Usually companies, entities, they have some ending word that tells you what type of entity the company is. If that's a corporation, that's why INCCO Corps are. And if you see LTD, that's a limited partnership or limited liability company, and LP is limited partnership. So that's why we are paying attention to the name of the company. So now that we know that 1, 2, 3, 4, 5 companies here met our filters requirement, you will record the name, the price they are selling, and the company's symbol. That's the symbol of the company. That's the company's name. Leg and plat INC. LEG is the symbol of that company stock. You'll record that on your spreadsheet, your investment spreadsheet, and then you'll record the price that they last sold, $29.87. And you'll record the dividend yield. That's annual dividend yield. That's what they pay a year. So 6.21. And I'm going to show you an example of dividend investment spreadsheet. I do have multiple tabs though, but we are just going to talk about one. You can use Google Sheet, you can use the Excel spreadsheet, but pretty much what you want to try is, we can leave some colon at the beginning, but you want to write the company's name, the company symbol, and you'll have a colon for the market is selling on, and that's a filter you are not going to apply at the stage we are on the browser. But you'll have a colon for it. You'll have a price colon, and where we found the price, it was like $29.87 for that one. So for that one, it's like leg and plat INC. You'll write the name LEG, you'll put the symbol, and then you'll skip the market colon, you'll put the price $29.87, and then the dividend rate 6%, 6.21%. So you'll put those things, and then you'll have other columns that you'll complete later. A column for 52 weeks range and 52 weeks high, and you'll have a column for sector, industry, and you might even have a column for let me see my brother here, but yeah, you'll have yet today return, not necessarily, but you'll have a column for trend, the chart trend, and you'll have a column for when they pay dividend. So you might need a letter. So, and then you'll have a column for sector, industry, sub-industry, and when they went public. And that helps over time, knowing that the company you are investing in, they are well you are well diversified. Let me see. So it pretty much helps you know if you are well diversified, if you have, you know, all the industries in your account in some way. So it's good to do that, and it's going to take time to have your list on your spreadsheet, but once you have it on your spreadsheet, it will be your go-to for things you are looking for. So, and as you complete, as you select a company, you just add it to your spreadsheet. So, and I don't know if I have those that I'm seeing. But anyway, so now let's go back. Now that you know what you will record, you will do it for the second one, the third one, the fourth one, and the last one. And when you are done recording, the company's name, the company's symbol, and that's, you see, they say the symbol, and the price, the current price, and the dividend yield they are paying. You record those things on your spreadsheets. You can just scroll to the top, and so it's good to scroll down to make sure there is not a second page. If there is a second page, it's good to visit that page as well. And you go back to the top and you click on household durable, and we'll go back to the list of the sub industries and click on home building. And under home building, we'll click on valuation and sort by dividend yield. And here we have 5%, 4%, 3%, and that's it. But we can scroll down to see what else we have out there, and they have second page as well. And I can just give you a few seconds if you want to screenshot. If you are using a brokerage account that is now with Charles Schwab and you don't know how to access dividend stock on the stock market using that brokerage account, you can screenshot them as well. But let me go back on top and just give you a few seconds to screenshot those companies. And we are going to scroll down and click on the second page to see what is out there. And we will go back to the first one. So now that you have take a look at the companies they are, we are going to focus on the first three. And now that we locate the first higher pay dividend, we'll go to the left and look at the company's name. We have INC, Nobility Homes INC, it passed that filter. MDC Holding IRC, it passed that filter. Secusio House Ltd, it is a limited liability company. It didn't pass our criteria, so therefore it's not going to be included. So here you are going to include MDC Holding INC on your spreadsheet. The symbol is MDC. The price is $47, and the dividend yield is 4.26% at the moment. And the second one is Nobility Homes Inc. You'll write the company's name, and the symbol is NOBH, and the price that it last sold was $29.95 a share, and the dividend yield is 3.34%. And then we will move to the next sub-industry, and that will be household appliances. Under household appliances, we will click on valuation, and under valuation we will click on dividend yield to sort, and we have 4.69%, 4.44%, and there is 21.19% here. I'm not sure why it's not at the top, and again, I'm not releasing the company's entity here, so I will be skeptical including it, so I'm not going to include it, but I can just scroll down a little bit for you to see the things if you want to screenshot. And that's just one page. And while we are here, 4.44% is Hamilton Beach Brand Holding CO. So it met the corporation criteria. Whirlpool Corp, it met the corporation criteria, and Whirlpool make freezers and stove and washing machine. I'm saying that because I have some of those products with Whirlpool brand on it and refrigerator, so I think I have at least 2 of those type of product in the house with that brand on it. Okay, but you'll notice that I didn't really talk about getting to know the companies. Frankly, most of the companies, I don't know them. And there are some companies that I know, and I know they are good companies, and I invest in them, but they don't pay a lot of high dividend on it, but they have growth in it, and they pay just very little dividend rates. So yeah, I'm making something, but I know that it's going to be more selling them to actually make the money in those stocks over time. And I'm talking about companies like Clorox or Pfizer. Pfizer pay at least 3%, I think. But there are just some companies that, you know, it's okay if you like some companies, you want to invest in them. It's okay to invest in them. And companies like Abbott, Johnson & Johnson, you know, Clorox. Yeah, so if there are some companies that you use the products and you know that there are companies that will be around for a while, look them up to see if they pay dividend, for how long they have been in business, see their chart growth, and decide if you want to invest in them. It's okay to have some of those companies that you believe in, even if they don't pay you a high dividend, but at least they pay you something and they show growth in their chart. So now we have those two. You can record Whirlpool Corp on your spreadsheet with the price 149.16 and the symbol WHR and the dividend yield 4.69%. And the second one will be Hamilton Beach Brand Holding CO with the price of $9.91 and the symbol HBB and the dividend yield 4.44%. And when you are done, you'll go back to household durable. because you don't want to keep doing that each time you want to invest in stock. That's why you want to record them on your spreadsheet so that you have something to go to. And but before you invest, you will search the company you're interested in to see how much they're selling at that point, because the price change multiple times in a day. So the price is not fixed. And we are clicking on household, houseware and specialty sub-industry. We'll click on valuation, and it does not even have many companies, therefore there is no reason to sort it. The highest one is 3.12, and then we have 2.65. So 2.65 is close to 3%. And sometimes the dividend yield varies because their price change, it affects the dividend yield. So it's a calculation between, you know, the amount they are paying and how much they are selling the shares. So the rate, I'm talking about the rate, to come up with the rate. So it does change based on how the share is fluctuating in the market. So this 2.65, at some time it can turn into 3 something as well. It depends. If the price is low, we have to do the calculations to see how to come with this rate. But I think when the price is low, the amount the dividend they are paying you is fixed. The amount they are paying you is fixed. So when the price is low, the dividend yield will be high. And when the price is up, the dividend yield rate will be low. Okay, so we are going to just recall Newell Brand Inc. And the symbol is NWL, and the price is $8.97, and the dividend rate is 3.12. Now that you have those on your spreadsheet, you will now apply the next filter. And for the next filter, you have to study each one of those companies that you record on your spreadsheet. I like to batch research. That's why we went through all those sub-industries to retrieve the high pay dividend that are corporations, have them on our spreadsheet, and now we are going to go through them one by one. Okay, so if you are doing it on another date, then when you log back in again, let's see if we can do that. So when you log in, you can click on US markets. When you log into your Charles Schwab, you click on research US markets. You don't need to click on return to classic view, because when you are analyzing each company's, the classic view look is different from the modern view. I like to go through the classic view because it allows me to access the industry, the sector list. So now from this stage, we are just going to research the companies using their search box. So we can start with, and before we start, let's take a look at, let's see now that we batch research the dividend stock. The next filter we are going to apply, we are going to see the market they sell on. We do not want companies that sell on OCT market, over the counter. We are going to remove them. And then we do not want new companies. That's why you have to set a year that you don't want to buy share from that stock past that year. Like the year they went public, you have to set your threshold. And for us, 2000, now not later than 2000. Anything before 2000, we will consider that. Okay, so you will set yours. and chart analysis. So we are going to use the chart analysis. So, and let's take a look at some chart here to refresh our memory for what we are going to be looking for. So this is an example of upward growth chart, and I try to set some criteria here that, you know, for a chart growth that is this upward, yeah, I can take 2% sometimes depending on the company, but 3% and plus before 2000 is that. But I have those type of different annual rates because I can apply those filter not all at once, but in back over time. Does that make sense? Like, for instance, you can say, okay, I'm going on my spreadsheet, I'm going to just filter out companies that are in that went public before 2000, pay 6% and have upward growth, and pull them out and invest in them, and then say, okay, I'm going to loosen up my filters, so I'm going to pull out the same criteria but 5% and higher, and then see those that will come up, upward growth, invest in them, and then I will do 4% and then 3% and maybe 2%. So so for this growth, you chances that they are not going to pay you a high dividend, but that example of chart, they're telling you that the company is in the price is increasing in value over time. You can see when they start in 1982, it was the vertical here is the price. You can see the price here, and the horizontal axis is the year. So when they went public and now, so you can see that they were selling at the beginning below 50, and now they are over 100. So that means if you have purchased it in the 80s around 25 a share and is selling for over 200, when you sell that now, you'll make over 200 profits on a share. So, but having it for that long, hoping it will build equity for you, it makes sense if it's paying you some sort of dividend over time, so that it's generating some income. But for this specific exercise, we want to generate dividend income. So that means we are going to invest a lot of our own money. Is our own money we are going to leverage. So working as employees, you live frugal lifestyle, and then you save your money to invest so that your money can generate dividend income for you. Yes, and at the same time, you are choosing companies that show growth, that you know that when you sell it, you'll make a lot of gain. But until then, you are generating a stream of income. Your capital is sitting there growing, but you are having a stream of income coming from that investment. And that's what the dividend is about. But for that dividend to accumulate, to become a lot, you have to invest a lot as well, and we can come to that. But right now, we want to have an idea of example of upward, because not all trusts are the same. And this think okay, and this one is growth and dip chart, and for this one I'm saying 6% is really what I want, but I can take 4%. And for the one that show growth and dip, that means when the market, when the economic is down, it'll affect the prices as well. So those are example of upward chart. And if I'm not in this view, I should be able to tell you what companies they are. So let me get back out of it. So this one is Clorox. I have the notes at the bottom. So this one is Clorox. You can see the chart. Clorox chart is upward. Yes, on a short run, they'll have growth and dip, but on the long run, you can see the oblique shape, the upward shape of the chart. And this chart is CAT, C-A-T chart, and I will say upward as well. It does show some growth and dip in it, but it's upward. And the next one is Colgate, and it has upward trend as well. And those are good companies to invest in my opinion. And this one is Johnson & Johnson chart, is upward chart. And this one is ENB, Inbridge, INC chart, and I will say growth as well. This one, okay, so this one is GIS, General Mills. I think they make cereals, and it has upward growth as well. We have Coca-Cola, KO, and it has upward chart as well. I have to say, the way the chart is, it could be a good one to trade as well. If you want to trade those growth and dip, if they are seasonal, you'll be able to buy them low and sell them high if you want to do that. But anyway, and this one is what HDD, Home Depot, and that is upward trend as well. So now let's see example of growth and dip chart. This chart is Verizon, and yeah, you will see that even growth and dip, the company is growing, but does have a big growth and a big dip. But you want to make sure the end is not as low as how they started when they went public. That's very important. You want that growth to show up so that you know that when you buy it, when decade later you want to sell it, you will sell it for a profit. Yes, if the economic is down, when you want to sell it, you may not sell it. Or when you sell, you still have profit, depending on when the price you bought it, a decade earlier or decades earlier. But it's for that reason that when you are buying growth and dip type of company stocks, you want to make sure they're at no point in the future that their price went down all the way to how they started. So this one is Verizon. Otherwise, you might just trade it, like invest short term. You trade it. They go up, you sell it. They go down, you buy it. They go up, you sell it. You make your profit. You assess that gain. So, and okay, so can we go to the next one? So this one is Pfizer. It's showing some growth and dip as well, but does have some growth to it, but does have big dip in it as well. And I have purchased Pfizer before and sold it as well, make profit. So I didn't keep it for long, but that's for some reason that's a company that I like to have in the portfolio. So this one is Ford, and Ford is just giving us an example of what I was talking about. A company that goes that down compared to how it went public. It is a company, in my opinion, to trade. But I think Ford does not really have a large gap between its 52 weeks low and high. To trade a company, I like the 52 weeks low and high to be, there is a gap in it, so that I know that if I buy a low, there is a chance I'll be able to sell at some point at high, even if I don't get to that 52 weeks high price. So, but yeah, Ford has been around since the 80s, but yeah, it does have some growth, it does have some dip as well. So it's a good idea that when you buy it low, when you reach some high, to just sell it and get out of it, and I don't know, and get back in it. Or if it's paying you high dividend, that's great. I have bought Ford before, held it for a few years, and sold it. So, but you get the idea. So now that we got some picture of what we are, what growth, upward chart and growth and deep charts looks like, let's get back to the spreadsheet, and let's get back to here, and let's analyze those companies that we just recorded. So let's see if I can make this a little bit bigger for us to see. This one we do not want. It does not have anything that we're interested in. So this one has LEG. So let's go search LEG. So you'll tap LEG and it will show you the company. You click on it. So now we are going to analyze the company. So from your spreadsheet, now you will just work from your spreadsheet and search each one of them. So you can see LEG, and this is the modern view. In the modern view, they will have the 52 weeks low and high. Like, I don't know how to explain it, but it's kind of with an image to it for you to see it. The price is that color. So it's selling for $29.87, but the lowest it have sold, the lowest is sold within 52 weeks is $28.77, and the highest that is sold within the 52 weeks is $41.93. So you will record $28.77 and $41.93 on your spreadsheet as well. I don't do it often, but if you can, it's good to do that. Okay, so, but again, it's just for your record. You might want to know some information at some point, and it's good to have that. But the price changes. So now that you have those, one thing you want to pay attention to even before you pay attention to 52 weeks low and 52 weeks high is the stock market, is New York Stock Exchange. So therefore, it passed that filter. If it say OCT, then you are not even going to continue. You'll just move out of this one and tap the next stock. But it say NYSE, New York Stock Exchange, you'll add that to your spreadsheet. And you are looking for New York Stock Exchange and NASDAQ. Those are the two that you are going to accept. Anything else, you are not going to accept it. So, and now that you have those things, you can scroll down and double check the dividend yield. It will have some technical metrics there, but we do not pay attention to it. And we'll go to the dividend, and the dividend is 16.16%. If you want the amount, is 46 cents, and the day they are going to pay the dividend is July 14, 6.16%. So you'll put those, and it's quarterly, so they'll pay 4 times a year, and July just mean January, February, March, April, May, June. July is the first month of the quarter. So you can put on in the column that you have for that, for instance, you'll put first month of the quarter. And the reason is, if you are looking for dividend, like over time, those things may not matter right away, but over time, you will fine-tune how you are investing. When you are tracking how much you are earning by month, and you know that things that will pay you in July, pretty much the following year they'll pay you in January. So if the first month of a quarter, let's say in January the total dividend earned is low, chances are the dividend you are going to earn in April is going to be low as well, because April will be the first month of the next quarter and July will be the first month of the next quarter. So after investing in multiple company stocks, then you will try to see, okay, how much am I making every month? Because if one quarter you make a dividend income every month of that quarter, that means every month of the year you are going to make a certain income through your dividend stock. So now you can say, okay, so since you are investing every month, then when you want to invest it again, you can say, okay, so what month do I make a low dividend income, and see, okay, what companies are paying me during that month, and then see what the price is compared to the 52 weeks low and high. And if there are companies you like, then you invest in them. If they are close to 52 weeks low, does that make sense? You can, after you have a certain number of companies in your spreadsheet, you can just continue reinvesting in them. You don't have to go back and keep searching. But yes, at first you will search, you can highlight, have notes for the one you want to invest in, and once you invest in them, you can just continue reinvesting in them. So at first, if you want, you can just buy one share of all the stocks you're interested in, and then over time you can just continue buying more of the one that are close to the 52 weeks low every month. And you can set a price that a dollar amount that you invest every month. And a lot of time I like to batch work and record things from this page and then search the next stock. But if you want to look at the chart right away, you can just click on that arrow and it will take you to the chart. Okay, I think we are the RASPA. So let's go back again. So you'll click on the chart and it will take you to the maximum chart. And let's take a look. I'm not seeing the chart. Okay, it's working. But yeah, and you can just, while it's looking for the chart for us, let me make sure I have that. There's something I wanted to, you just have to have, if you like routine, you can just decide how much you want to invest every month. And there are multiple ways to make that decision. And one way will be by targeting a certain dollar amount you want to earn as dividend income a year. And in this example, if you want to earn $1,000 in dividend a year, so that means you have to take that $1,000 divided by 6%. You have to set a dividend yield that you are willing to take, and at 6%, you need to invest every year $16,000 to make $1,000 in dividend a year at 6%. So I think the leg is paying you 6.21% or 6.16%. So, and if you need to invest 16,000 a year, how much will you invest a month? So that'll be 16,667 divided by 12. That's good to know. 16,667 divided by 12, and that'll be, you need to invest 1,388. So that's an example. So if you say, you know what, I want to make $500 in dividend income a year, It may not sound a lot, but it is a lot of money you are making without working, without trading your time. So 500 a year in dividend income divided by 6%. That's why you want companies that will pay you high dividend, but good companies that your money will continue to grow, build equity there for you while you are making that dividend income. It's going to give you 8,333 that you need to invest every year. So divided by 12 is 694. So let's just say 695. So if you are investing 695 a month, for a year, you'll make 500 in dividend income. But then if you just keep investing, you say, okay, you know what, 695 every month, I will send it to my brokerage account and invest it. And you are doing that every year, every month. That means every year, you are making 500 in dividend income. So when you are doing that for 12 years, for instance, so that means you are making 500 in dividend income. You are investing 695 every month for 12 years. That means you are making 500 in dividend income from that investment you are making. You are making at least 500 dividend income every year for 12 years. That means after 12 years you will be making that $500 in dividend income a month. So, and I'm sure it's going to be more than that because of that. If you just keep reinvesting everything, it will just keep accumulating. So, but just for simplicity purposes, just taking how much you're investing a month to get to how much you want to make a year, and you have been doing that. That's 12 months in it. You have been doing that for 12 years. That means how much you are making a year, you are going to be making that a month after 12 years because you have 12 times of that input there generating 12 times that return if in 1 year after 12 years. Then that would be making 1/12 of that a month. Am I confusing you already? But okay, so let's get back to visual here. So, and that's one way to view it. Another way will be, I think we just covered that one, right? Another way will be to target your expenses. So let me see if I have an example here. And while we are doing that, let's get back to, okay, so we are now going to access chart. Okay, let's stay here and try another company. We'll get back to the, no, before we can do that, we are going to go back. And ETD. 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 Is it ETD or EDT? So let's go check. ETD. Okay. For some reason, it's not opening the chart. But at least it's showing us that it is close to 52 weeks high. Therefore, if you have money to invest now, it won't be the right time to invest in this one. It is New York Stock Exchange, so that's good. It passed that criteria as well. But we are not going to be able to analyze the trend and add it to the spreadsheet that is upward trend or not. But I'm going to get out of the chart view and scroll to the dividend. Dividend is 5%, and It pay in May, January, February, March, April, May, June. So it's second month of the quarter. And in some way we can just do that. We can just analyze. Let me go back here. We can just analyze, since I like to batch do those research, we can just analyze the companies without the chart. And we have HOFT, and this one is NASDAQ. You record that it passed that criteria as well, and the price you compare it to 52 weeks low and 52 weeks high is close to 52 weeks high, $22.10 than it is to $12.90. So it's not the right time to invest in it. And you can scroll down and look at the dividend yield, and when they are paying it is 4.65, and it's quarterly, and it's paid in June, so last month of the quarter. Okay, and those things will go on your spreadsheet as well. And I think we have BSET. BSET and BSET fifth is NASDAQ, so it passed that criteria, and 15,335 is close to 1330 than it is to 2411. So if the chart is a good one and it has been around before 2000, then that's a good one to invest in, and that's the right time to invest in it as well. And technically you can find out about the company's history on this page too, though. Probably in the classic view, company profile. If we click on show more, Incorporated was founded in 1902 and is based in Virginia. So Baseford, so 1902. That's good. So probably the chart will show 1980. But so that's good. And now the chart will tell us how the growth is. If that's upward growth or growth and dip. But other than that, it passed the year. We just don't know about the chart. Now we will go to the next one. Oh, did we check the dividend yield? 4.17% quarterly and May. You will put those information on your spreadsheets, and you'll go to the next one. The next one is FLXS. FLXX. Okay, 52 weeks low 13, 52 weeks high 22, is selling for 19, is close to 22, that it is close to 13. Therefore, it's not the right time to invest in it, to buy it, but it's selling on NASDAQ. So it passed that filter of NASDAQ. And what year it was created? (1893), based in Dubuque, Iowa. So FLXS 1890. The dividend yield 3.11 and pay in July. And then we'll go back to the next one, and those are information you will put on your spreadsheet. Now we will stay there, but again, if you want that 2.53 to make the car, you can add it to it as well. But I'm going to let's take a look at the LZB. So LZB is $28, is close to 52 weeks high, which is $33 than it is to 52 weeks low, $21. So, and the dividend is selling on New York Stock Exchange, so it passed that market exchange filter, and the dividend yield is 2.55. I think you didn't notice that the dividend yield is a little bit different. Yeah, 53, 2.53, then 2.55 here. So in June, third month of the quarter, and the company was around 1927. Good, but it was okay, so the company was formerly known as La-Z-Boy Chair Company and changed its name to La-Z-Boy Incorporated in 1996. La-Z-Boy Incorporated was founded in 1927 and is headquartered in, okay, so this is that when they were founded is now when they went public. That's something to know as well. But yeah, but the reason why I go with the date on the chart is the chart just tells us since when they went public how they have been doing. But if they have been around since that far, you won't know the growth chart up to when they went public. So I like to go with the chart. Okay, so now let's see what is next to analyze here. That'll be MDC. I'm not sure we search it yet. And MDC is on New York Stock Exchange, so it passed that criteria, selling for $47 and is close to the 52 weeks high than it is to 52 weeks low. And 52 weeks low is $27 and is selling for $47. So pretty much almost double the price. So, and this one is an example of if you, it may not really be, but it's an example. If you want to trade a stock, you could pick something like that to trade it and say that if you buy it around, it's not really a good example. It's close, but it's good when you have a big gap between the 52 weeks low and the 52 weeks high. You'll be able to trade it, you know. But this one, if you want to trade it, you can see that if you bought it around $27, when it's around $40, you will sell it and make some profit, not knowing that it's going to reach $47. That's an example. But anyway, let's continue. Those things will be recorded on the spreadsheet, and then you can check the dividend yield you pay in May, second month of the quarter, and 4.26%, and has been around since 1972. Okay, 1972. It does not say when it went public in the company profile though, but and we will search the next one, and the next one is Nobility Homes. Okay, it's OCT market, therefore we are not even going to continue anything with it. And we will move to the next one, and this one we have two. We have Whirlpool WHR, and it's selling on New York Stock Exchange, so it passed that criteria, and it's selling for 149.16, 52 weeks low 124.10, 52 weeks high 178.5. So this is a good one that if you want to trade you can, but it's a high dollar amount, over $100 a share. But you can see over $100 a share, but it's not doubling though, so I don't really think if that's the group. But it has a gap between the low and the high, that if you buy low, you know that it will reach a certain high that you will sell it, not knowing if it's going to reach that 78. You know that it can maybe 150, you can still make some profit. Does that make sense? So you want to make $20 a share on profit, it reach 140 or 150 or 160, you sell it and get out of it. So that's one thing to do as well. But it's now what we are doing here, we are investing long term. So let's check the dividend yield. But that's something to pay attention to. When there is a gap between 52 weeks low and 52 weeks high, if there is a good gap between it and the stock is a good company that pays dividend, well, you can trade it as well if you want to trade it by buying it when it's close to 52 weeks low, and when it's high a little bit you sell it and make some return right away. So this one is 4.69%. That's good. Pay the third month of the quarter, and let's see when it went public, or not, when it was created or founded. 1911. Okay, and let's check the next one, and those are informations that will be recorded on your spreadsheet. Okay, and you can see at the time that I recorded, the price was higher and the dividend yield is lower. So those things does varies. But again, if I said, okay, I didn't want any 3%, maybe it may not even make the mark here. But right now that the price is lower, the dividend yield is 4 point something, 4.69%. So that's something to consider. Those things does vary. It has upward chart, and the chart started in 1980. So I have 1980 there, even though it was founded in 1911. So, but that's, and when you are interested in the company, you can just put a note next to it, so that later you can invest in it. And I believe it pay in June, so be good to yeah, you see how I'm putting it here, month 3, and this one is month 3 too, like the third month of the quarter. It pay in June. And yeah, he was in household durable. I do have that MBC, so it show growth and dip for the chart. When I look at, and I think we did look BSCS, it has growth and chart for that as well. And the leg has upward chart, and I believe it's 1980. And yeah, good to purchase. So you can put some notes, and then the one you purchase, you can put some, let's say you can put some red highlights on for the one you want to purchase, and then when you make the purchase, you can color code that cell so that you know that you bought those. You can just use what works for you to mark the one you already invested in. Could be one example. And right now, Whirlpool is now on the low side if you want to invest in it. So it's close to the high. So we have, so now this one is HBB. HBB is on New York Stock Exchange. $9 is close to $9.21. Then it is close to $14.93. If that is a good company, that'll be the right time to buy some share. And right now I'm not seeing some stuff, and the dividend is 4.44, pay in month 3 of the quarter. And let's see for how long it has been around. 1904. Okay, 1904. But when that went public, the chart will tell us. So don't know if I have it here, but I put downward trend for it. So it met requirement up to that stage. So you can see the different criteria that we are applying. When you have things on your spreadsheet and you are going through them one by one, you want to make sure they are selling on New York Stock Exchange or NASDAQ. And then you want to check the chart. And if the chart is upward, you want to make mark on those that is good to buy. Does not mean you are going to buy it right away, because it might be close to 52 weeks high. But does not mean it's not a company for you to invest in. It's a company to invest in, but not at the right moment. So therefore, you can put mark on it that times to times you can come back and check on it to see when it goes low, you can invest in them. So that's that. But then when you have downward trend, you do not want to invest in that, even if it's paying you a high dividend. So okay, I'm not even going to bother with this one. I'm not sure why it didn't go all the way. So this one we have NWL. NWL is close to 52 weeks low. Is on NASDAQ, so it passed that criteria. $8.97 is close to 52 weeks low. 780 down it is to 21.55. This is an example that if that's a good company, that you can trade it, because the gap between 7 and 21, it double at some point within it. Double of this is $15. So if you buy it on low, it goes high a little bit to $15. You can sell it and make a profit. So that would be trading. So, but let's go down and check more about this company. The dividend that we recorded, you'll check it here, 3.12 month 3 of the quarter. And let's see when it was founded. 1903 in Georgia. Okay, it'll be good to see if when it went public though. But okay, so 1903. Now that we went through those companies and search to see if they met the market they are selling on, and we avoid OCT. We came across one OCT. The year they found it is what tells you if they are new companies or not, depending on the benchmark that you set. And we said 2000. Anything before 2000 is good. Anything after 2000 is not. And we'll use the chart analysis to see that's upward or growth and deep. And 52 weeks low and to 52 weeks high in relation to the current price is what tells you when to buy the stock. So and at this point, let's click on the chart to see if our chart is working for us. And I don't think it's working because usually it does not pull over those information here. But I might just have to look at the chart later and to see how the chart will be for some of them. I do have some here, New World Brand. I analyze it and I say it's level, and the year that you went, the chart started was 1980, and so in that durable household durable category, we have two upward, and that would be Whirlpool, Leggett, and Plus, and that's it. Everything else there is either level or growth and deep. And we search, and those are household durable. Back when I did the search, those are the ones that I record on my spreadsheets. But based on the dividend yield that you set as threshold, your record might be different from mine. So now let's go back to here. We are talking about investing, so you can say that you want to earn dividend income that will cover your living expenses. So you have to know how much your living expenses are, and be good to do that without mortgage, without debt in it. Like if you pay off all your debts, so your minimum, your need, your basic need, a lot of the time it's not a big dollar amount. And in this example is, let's just say it's 1,100. So, or 1,000, just to be simple. And then you have irregular expenses as well. And those are expenses that you pay for during the month. Now you pay for during the year, but now on a monthly basis. I like to call them irregular expenses and save for those. And those could include school supplies, school registration, kids clothing, or home maintenance, like calling a plumber to come and fix a clogged pipe, or fixing something on the house, or buying a household appliances like buying a washing machine or a dryer or a freezer, you know. So you just estimate how much it costs you a year to make those expenses. You may not buy every single one of those things a year in each category, but you just estimate. And then the total at the end of the year, you divide it by 12. The total is for the year for each category, and then you divide it by 12, the total by 12, and it will give you, it's just an example, it will give you, you know, that total for the year divided by 12 will give you how much you need to save a month to cover those expenses when they incur, or if they incur. So now let's say that the total you want to save a month for your irregular expenses, including holiday gift, holiday travel and things like that, is $1,000, and your basic living expenses is $1,000, and it's going to be $1,000. If, for instance, you take allowances out of here, is already less than $1,000. So, and let's say it's $1,000 on each, then you can say, okay, how much I need to invest to generate $12,000 a year, because $1,000 a month for basic living expenses is $12,000 a year. Or for irregular expenses and monthly expenses is $2,000 a month, so that will be $24,000 a year. So for 6% dividend yield, then you'll take $24,000 divided by 6%, and that will give you $400,000 that you'll have invested to generate $24,000 a year. Or you'll take $12,000 if you just want living expenses covered. $12,000 divided by 6% will give you $200,000 invested. So if you have $200,000 invested in dividend stocks that pay 6% at least, you will be making $12,000 a year in dividend income. We are not even talking about selling the stocks yet. So your money will be there generating $12,000 a more and more, because yeah, if you have been investing it, reinvesting the dividend, you will get there even faster. But then if you turn off the dividend yield, if you turn off reinvesting the dividend button, it will be cash in your account, and you can just take that cash out. So that's one way. Another way to see how much you want to invest is just take a specific expense. Let's just say internet here. Let's say internet and phone. Let's see how much those things cost here. If we take the 9.99, 8.55, let's just say those two things and say 100 a month, and that is what internet and and Hulu. So $100, let's say $100 a month, and you say, okay, I'm paying $100 on internet and cable, or how I'm calling it cable because of what it does, watching things. So, and you want to invest in a company that will pay you at least 6% dividend a year to cover that expense. So you will take that $100, and that's a monthly expense, times, oh sorry, okay, so $100 a month times 12, so you need 1,200. So that 1,200 you divided by 0.06. So you need to invest $20,000 in a stock that pays 6% dividend, annual dividend rates, for you to generate $1,200 a year in dividend income, and that will cover your annual expense when it comes to internet and cable. Does that make sense? So you can categorize your expenses and just take one category and say, okay, I'm going to, how much should I invest on a dividend stocks, at what rate, to generate enough in dividend income to cover this category expenses for the year. And then you will do the calculation the way we did it. Or you can just aggregate it and use your whole expense the way we did it earlier with $12,000 or $24,000 a year. That's another option as well. So and here is just saying, so when you set a 10-year or 12-year time frame to reach whatever goal you set, you just walk backward and see what step you should take today so that you'll be able to get there, and you set a routine. And that way, with a routine, you just keep doing that, and it'll become a part of your habit, if that makes sense. That's why I'm saying you can just set a goal, a small goal, if that's $100 a month you want to invest, and you are just doing that, knowing what return you get a year on that 100. Then you will increase that 100 over time, and that 100 will continue growing as well, because you are reinvesting the dividend you are earning. So, and this one is working based on that 400. So like if you use $24,000 divided by 6%, you need $400,000 invested to generate $24,000 a year for your living expenses. So that $400,000 is not something you'll come off overnight. So you set 10 or 12 years goal, and that $400 divided by 10 will give you $40,000. Or if you are working with $12,000, just basic need expenses, annual expenses, then $200,000, which is $12,000 divided by 6%, that give you $200,000. Invest it at 6% to generate $12,000 a year. You take that $200,000 divided by 10, that will give you the amount you need to invest a year, and that is $20,000 for 200 or $40,000 for 400 in 10 years. So that 40,000, when you divide it by 12, it will give you 3,333 that you need to invest a year. No, you need to invest a month. Yeah. Or if you take 20,000 divided by 12, that will be 1,700 that you need to invest a month for 10 years to have $200,000 invested. And if you invest that in a stock that pay you 6% dividend return, then you'll be making 20,000. No, you'll be making 12,000 a year on dividend income, if that makes sense. Okay. let's make sure we cover. So yeah, we already covered that. So if you are wondering how to invest, you can break it down. You can use your living expense and break it down to category, or you can use your whole living expense, or you can just set a dividend income that you want to make and back into it to see how much you need to invest. Okay, so how many dividend stocks do you have to have in your portfolio? I think it varies. You can target 100, that way you know that you cover all the sectors, all the not all the sub-industries, but all the industries or all the sectors in the market. And after that, you can just keep reinvesting in them. So, and yeah, it's good to be diversified. So that's why it's good that you have the sector, the industry, and sub-industry. That way you know which one you are investing in to see if you cover all your bases there. But select stock based on month dividend are paid to ensure you generate on the month dividend are paid to ensure you generate dividend income every month. Let me see if I have an example here. So do you see this example here? So when you are recording your stocks every month, you will go to account and other account. When you click on history, it will take you to your history. And I don't know if I have an example, but the history it'll take you to the history, and that's the history section. You'll be able to see the dividend paid by some companies. You'll be able to see the dividend paid by some companies and how much you reinvested or how much you purchased stock wise. So the history of the account, it'll show you that. And when you go up on that page, on the history page, when you go like on the top bar, it will give you the option to export or to print. So when you click on export, you'll be able to export it to your spreadsheet. And that's pretty much what I'm showing. So under account, you go to your history, and in your history on top you'll have your account. You'll make sure you are in the right account. If you have multiple accounts with Charles Schwab, and you will set the range. And it's good to set, if you are tracking by month, to set the monthly range, and then you will see for the month what pay you what, how much you stocks you purchase. And you go on the top section of the page and export it, and you'll export it as a CSV. And when you export it, you'll export it to your spreadsheet. And I can show you an example. You'll export it to your spreadsheet, and you can manually, even from your account, if you want to just manually copy the amount they pay you, it's reinvesting it already. But this one paid 29 cents, for instance. So, and is reinvesting it. So that means it's buying 0.01 share at that price. So 21 cents. If you want, you can just go to your spreadsheet to that company and just type, I think it's like Yeah, I had to know the symbol of the one that I just saw here, HPE. And you have to make sure you have all your, okay, so it's not added, so it has to be added. And to add it, HP, it will be here. So I can just copy that one and I can just insert copy cell and I will change it to HPE. If that's the right symbol name. So, and you can just manually add the amount they pay you there, or you can have a spreadsheet, you can have formula to just pull the information to the spreadsheet. That way automatically every month when you copy and add the prior month to your Roth tab, it will automatically update your spreadsheet with the dividend earned. And we have the example, and that's how you will see and see, okay, so January you didn't make a high dividend income compared to the third month of the quarter. Therefore, that means the following quarter, the first month, you won't make a lot either. And if you want to invest in, you want to buy more stocks, then you see, okay, so what are the companies that pay me the first month of the quarter? That's when that record of when those companies pay dividend last, to know what part of what month in the quarter they pay will come into play. When you go to your spreadsheet, you see them and say, okay, so this company pay a month one of the quarter. Therefore, if the price, you go back to your account and search that company and see CM, for instance. Let me see if they didn't get us out of here. CM, if CM is on the low side, which it is, but is selling for $43, and the 52 weeks low is 39 and 52 weeks high is 53. So you'll ask yourself, is it close to 39? That it is close to 53. And if it's close to 39, then you buy more share of it. Does that make sense? And to know if it's close, because sometimes when it's close to the mirror, it might be hard for you to decide. One way I like to do that is take 42.98 minus 39.3652. That is the 52 weeks low. So the price is selling minus the 52 weeks low will give me 3.61. That's the difference between the two. 3.61. Now I'm going to take the 52 weeks high. 53.1484 minus 42.98. So the 52 weeks high minus the price is selling is 10.16. So it is closer to the 52 weeks low than it is to 52 weeks high. Therefore, if you want to invest, that'll be the right time to invest. And again, to invest, we have done the work on that, but a lot of time I like to double check. We are on the chart side. I like to scroll down and check the dividend, and the dividend is 6.14. It pay in quarter one, July. It pay in month one of the quarter, and we can see when it was founded. 1867, and is a Canadian company. And the short-term chart, 1 year chart, is telling us that it went on the low side in January, but then flooded with it in May as well and start going up. So I don't know year to date, but 5 year I would prefer the maximum chart, but the maximum chart is not working for us. Well, I don't use 5 year chart. I prefer the maximum, but right now it's not working. But just to see the growth of the chart, I like to see the trend of the chart. I like to analyze the chart on the mass scale, on that large scale, so you can show me the trend better. So that's for that reason, that once you have a certain number of stocks, or you invest in all the stocks that you retrieve, that pass all your 5 filters that we say, then you'll start looking at how much they are paying you in dividend. Let's say you have 100, you have 100 stocks that you invested in, and you have 100 stocks or more on your spreadsheet, and you filter them, and they all met your criteria, your 5 filters, they pass those, and you start investing in them a little by little, and you invest in like 100 of them, then you can start seeing how they are paying you dividend, and start seeing, okay, so after you have enough, that for 1 quarter, 3 months in 1 quarter, each you have some stocks that pay you a dividend, and you have income every month of those quarters. That means every month of the year you'll have income from dividend. But then you can see, okay, so what month you earn the least, and see what companies you invest in those, how much they pay in dividend, what is the dividend rate, what is their growth chart, how you feel about them, and then you can invest in more if the price they are selling is close to their 52 weeks low. But if the price is now close to 52 weeks low, but you have money to invest, then you can invest in another one that is on your list, that the price is close to 52 weeks low, and you want to buy more of that. Does that make sense? So yeah, that's how you find dividend stocks to invest in. Analyze them to pull out the good ones that you want to invest in long term. That's why we set a time frame to focus on companies that are not new companies, and show a good growth on their chart, that you know that when you purchase them, they are going to pay you dividend over the years. But then when you decide to sell the stocks, the share, you'll make a profit as well, because it will grow in value over time. Thank you so much for watching. On our channel, we share different ways to make money and different ways to save money to reach your financial independence. So, and investing in dividend stocks is one way to make money by creating another stream of income, leveraging your salary from your job or your wages from your job. Thank you so much for your time. We thank you all that watch our videos. Thank you all that subscribe to our channel, and thank you very much for your time. We thank you for all your comments. Afiavi Liberman, creators of Liberman Consulting L.L.C YouTube channel, and ninasop.com, our blog, where you can find free download that you can use to manage your business or to manage your personal finances. Thank you. Okay, so we are doing the chart here, and this one is CM, and we want to make sure we have the maximum chart. So under custom, you click on maximum, and you can see it has some growth to it, but it has growth and dip as well. So I'll consider this as growth and dip, and it's 1998. It went public in 1998, before 2000, but it was founded way before that. So it's CM, and we can now search some of our companies that we researched earlier. And we can start with the last one, and that will be NWL. We didn't search this one, it's 3 something, so NWL. NWL. And LWL is downward, in my opinion. It's growth and dip. You can see when it starts 15, and it's selling for $8. Below that, I will not recommend it. And that's what I would call downward trend. It has been around, but I think it will be a good one if you want to trade. But for long term, I will not recommend it. Okay, so this one we didn't LCUT, we didn't search it. So I'm not going to look at the trend for that. And we make this one a little bit bigger for us to see. We have HBB. HBB, well, is downward trend. It went public. It has been around for a while, but it went public in 2018, and you can see that's why, even though the company profile say that it went public, the year was quite in the past. The chart tells me when it went public, and I can analyze the growth through the chart. That's why I use the chart, not the company profile for the year. So it's downward. I will not recommend investing in this company. And the next one is WHR, Whirlpool. WHR. So you can see that even though those companies pass our criteria up to the chart analysis, some of them are not meeting our upward growth or growth and dip. So Whirlpool, the max, I hope I don't have to keep doing these max things. Yeah, I had to keep doing it because now it's 1980 here. That has a growth chart. Therefore, it's good to invest in it, in my opinion. It met all our requirements. It is a corporation. Pay dividend, we look at it before. Pay dividend 4 point something percent, and at the moment, and it's selling on New York Stock Exchange, and it has a growth wall, an upward trend growth, and the company has been around before 1980 or before 2000. The benchmark, anything before that is acceptable. It's paying 4% something in return with upward trend, and it's great, but it's not the right time to buy. Therefore, on your spreadsheet, you can highlight that it's good company to buy, and buy it when it's on low. But again, yeah. So we have an example of it here. Is Whirlpool upward 1980, and the notes there to buy. But then when you are ready to buy, you'll check the price and compare it to 52 weeks low and 52 weeks high, and is close to 52 weeks high. Therefore, it's not the right time to invest in Whirlpool. But it is a good company to mark on your spreadsheet that is a good dividend company that you want to buy some share of. So let's go back to our next one. We have the NOBH was OCT, therefore we are not even going to go with a MDC. So MDC is on the high side, therefore it's not the right time to buy. But let's see the chart. The chart has growth to it, but it has a big dip as well. So we will need to go to the chart and put maximum. And you can see when it starts, the price, and how it's selling now. So you can see that growth. That's what you want. But in between the two, it has big jump up and down. Therefore, is a growth and dip. Yes, we can invest in some of those, but it better be paying us high dividend. So, and I don't know how much this MDC is paying, but it could be a good one to trade. Let's see. 47 and 27 and 47 is $20 difference. So $20 difference. So that means if you buy at 27, when it's at 37, you can start thinking about selling it to make $10 a profit a share. So if you have 100 of that, $10 a profit will be 1,000. So let's bring our calculator here. So if, let's say, it's selling for 27.04 and you purchase 10 share, that's 270. So when it reach 30, let's say 38, you sell those 10 share, that will be 380 minus 270 04. You will make 109. You see? So that's that. Now knowing if it's going to reach 47 again, if when it goes down to 27, you can buy it. And then when it's around 37, 38, 39, you can sell it if you don't know what the next 52 weeks high will be. So when you have when it's now close to 52 weeks low, you can buy some. And at that point, it will tell you what the 52 weeks high is. And when the 52 weeks high, when you are somewhere, you will target a price somewhere between that you know that for sure is going to reach. But again, I'm not really showing how to trade stocks in this video. It's more about how to invest in dividend stocks. But at the same time, if I'm going to trade a stock, that's during this process that I find those stocks that I want to trade. I want to invest to trade stocks that will pay me dividend as well. So yeah, so I have eyes for those, but my first things will be the gap between the 52 weeks low and high. If the gap is good enough that I know that if I buy a low, I'll be able to stay high somewhere, even if it does not reach that 52 weeks high that I'm seeing. It will reach something that I can make profit on, but it has to have enough gap for that to happen. Okay. And then I'll look at the short-term chart, 1 year chart, to see 1 year chart for the past 3 years, for instance, to see when it tends to go low, when it tends to go high, to see if there is a seasonality to it that I can expect, when it will go low and when it will go high, to buy and then to sell. But yeah, MGC has a growth and dip chart, and I don't know, I think we do have a MGC, and I put growth and dip chart for it, and I can put, yeah, good to buy some or to trade. And I can put it on red so that it is a note that I can come back and analyze the more later. So now we are going to go to the next one, and it's going to be I'm starting it from the bottom, FLXX. It's not the right time to buy. The price is close to 52 weeks high. The price is close to 52 weeks high, down 8 days to 52 weeks low. So it's not the right time to buy if it is a good one. Again, let's go pull the chart at the maximum. $19.80. Okay, so it has growth and dip. It has growth and dip. I think that's what I would call level, because you can see that even though I have some big jump here, it's still coming back to, you know, to that. So this one I will say level. It's now, let me see here. I don't even know if I have it here. I don't. And what is the return? 4.72. No, it's not that. 3.14. 3.14 is level. 13 and 22. 13 and 22 is now really double. Let's just say 52 weeks low and 52 weeks high is good if there is a double price for those low dollar amount, or if there is enough gap that you can make $10 a profit a share. Does that make sense? Yeah, Okay, but anyway, I don't know. Maybe when I'm trading, I'll pay attention to what I do, and then I'll write a formula that is underlying my decisions, and then we can talk about it. But right now, I try to write down the formula that underline my decision when I pick stocks to invest, and that's what we are using to find dividend stocks. And I don't trade a lot, so when I'm trading, maybe I will talk about yeah, the role that I've been using. But yeah, I trade Allegiance because that's something my husband like, and Toyota is something we invest in, and I trade it. In fact, I bought it to trade it, and I trade it. But yeah, you can see that I invest more than I trade, and I picked 2 companies to trade this year. But yeah, let's get back to what we are doing. Okay, so BSET is close to 52 weeks low than it is to 52 weeks high. So let's see what the chart is doing. So it's growth and dip, but 1980, but you can see that the growth and dip, for this dip, it can even go past, it can go below how much it started with when it went public. So again, I will not invest in this company long term. And Hofts, because you want your money while it's invested generating dividend income to keep building equity for you. So it has to be that the company stock price is going up over time, so that when you sell it, you can make profit. So this one, so it's better you select few good companies than having a lot of companies that a lot of them are not good. So this one, it has growth and dip. I don't know, 1996 is kind of young to me, but we said 2000. But it has growth and dip. Frankly, if I'll have 1996, it has to be upward trend though. But anyway, that's growth and dip. Okay. I don't know, I just didn't feel good about that trend. And the year feel kind of young to me. Even though I said 2000. Still, I don't know, it's young. ETD. So ETD is trading close to 52 weeks high. That's why it's good to have some picture of good upward trend and good downward, good growth and dip trend chart trend. before you start analyzing your companies to see. So this one 1994, it has growth and dip, and you can see that the dip can be close to how it started. So I will not invest in this company, my opinion. And we have leg. L-E-G, leg. Leg is close to 20. Leg is trading. The price is close to its 52 weeks low, down 80 to 52 weeks high. And the difference between 28 and 41, you can make $10 a share of profit within it, but it's close though. $10 will be 38. Let's make sure we have maximum chart. This one has upward growth. It does show some dip in it, but I will say, okay, I mean, you can call it growth and dip. Did you see, even within growth and dip, there is some growth and dip you like, and there is some growth and dip you won't like. You can see how my attitude was towards some of them that we come across prior to this one. So this one, I feel good about the growth and dip. I'm seeing growth here more than I'm seeing the dip. So, and then it has been around, it went public in the 1980s, if not before. So that's a good one to invest in my opinion. As for trading it though, is another story too. You can try, but it's on the low side. So that means if you want to buy it now, you will buy it now. So we've come across two, in fact we come across three. One is not in this sector, but we come across leg and Whirlpool, but Whirlpool is on the high side, so Whirlpool is not the right time to invest in it right now. But leg is on the low side. It's selling for $29, and the 52 weeks low is $28 versus 41 for 52 weeks high. Therefore, if you want to buy, that'll be the right time to buy some to invest in. Again, we're investing long term. It can continue to go down, but again, the short-term chart will tell you if it start going up. But yeah, since we have 28, we have 29, I would think it start going up. But the short-term chart will give you 1 month chart, for instance, will give you the trend. But then we have the CM. I think the CM was on the low side as well. But let me close the chart and see the short-term chart for the legged. In fact, you see, it start going up. You can see the trend of the chart here, but it reached that low right at the end of June. And you can even use those shortest one, but I just want to see the trend. It went down and start going up. So yeah.
Jan and Gabby are already done showering.
Good. You can start your schedule. I'll get you out soon. So yeah, it's good to buy some to invest in. So that's how that's an example of how I find stocks that pay dividend, and we went through the process to retrieve them, to analyze them, putting them through dividend, through through different filters, and now we are looking at the chart to record the trend of the chart and make the final decision whether it is a good company to invest in long term or not. And then when you find the one that is good to invest in, you can make some note like, yeah, go to purchase, go to purchase and things like that next week. And is it legged? I put upward, even though I say it's kind of good growth and deep. Here I call it upward. So that's the way you call the chart will depend on you, depend on how you feel about the chart. If it's showing more growth than it's showing more deep, that, or you can even use other terminology that works for you, to classify them. Thank you so much for your time.